Hi, in this video, we will solve a complete comprehensive example under the second method of adjustment of capital at the time of retirement of partner. The second method of adjustment of capital is where the total capital of the remaining partners is to be in their new profit sharing ratio. So let's go to the example sum. Example sum. Amit, Balan and Chandar were partners in a firm sharing profits in the proportion of half, 1/3 and 1/6 respectively. Chandar retired on 1st April 2019. The balance sheet of the firm on the date of Chandar's retirement was as follows. To the left of the screen we have the balance sheet given. On the right, additional information. It was agreed that the first point, goodwill will be valued at rupees 27,000. Second point, depreciation of 10% was provided on machinery. Third point, patents were to be reduced by 20%. Fourth point, an old photocopier previously written off was sold for rupees 600. Fifth point, Chandar took over the investments for rupees 15,800. And last point, Amit and Balan decided to adjust their capitals in proportion of their profit sharing ratio by opening current accounts. We are asked to prepare the revaluation account, partners' capital accounts and the balance sheet of the reconstituted firm. So let's get the old profit sharing ratio between Amit, Balan and Chandar correct. Between A is to B is to C, it is 1/2 is to 1/3 is to 1/6, and this can be written as 3 is to 2 is to 1. Chandar is a partner who's retiring, and in the additional information, the point 6, which says Amit and Balan decided to adjust their capitals in proportion of their profit sharing ratio by opening current accounts. So this is a second method of adjustment of capital in retirement of partner, where the continuing partners decide that their capitals will be in the NPSR. Moreover, we need to make the adjustments not through bank but through current accounts, because that is what is specified. So we'll begin with the revaluation account, go ahead with the partners' capital account and then the balance sheet. Working notes will be done below the balance sheet. So let's go on with the solution. Solution. Revaluation account. Left side debit side, right side credit side, particulars, rupees, particulars, rupees. The first point in the additional information, it's about the goodwill. We'll ignore that for now. Second point, depreciation of 10% was provided on machinery. So to machinery account, 10% of 48,000, 4,800 rupees. Third point, patents were to be reduced by 20%. 20% of 5,000 rupees 1,000. So to patents account, 1,000 rupees. Fourth point, an old photocopier previously written off was sold for rupees 600. The journal entry is bank account to revaluation account for the amount of 600. So it's by bank account 600 rupees. The fifth point, Chandar took over the investments for rupees 15,800. The book value of the investments is 10,000. It is valued at 15,800 before Chandar takes it over. So we increase the value of investments by investments account 5,800 rupees. The sixth point is about the adjustment of capital. All the entries are done. We'll balance the revaluation account. Greater total on the credit side, 6,400 rupees. There's a gain on revaluation. To gain on revaluation, transferred to partners' capital accounts. We have Amit, Balan and Chandar. 6,400 minus the total of the debit side is 5,800. We get the gain of rupees 600 to be divided in OPSR 3:2:1. So against partner A 300 rupees, against partner B 200 rupees and against partner Chandar 100 rupees. So this is a revaluation account. Let's go ahead with the partners' capital accounts. Partners' capital accounts. Left side debit side, right side credit side. Particulars. Amit, Balan and Chandar. Again on the credit side we have particulars. Amit, Balan and Chandar. We'll begin by bringing down the balance of capital accounts. By balance brought down from the balance sheet, 40,000 for Amit, 36,500 for Balan and 20,000 rupees for Chandar. We'll transfer the gain on revaluation by revaluation account. As per the revaluation account, it was 300 for Amit, 200 for Balan and 100 rupees for Chandar. We'll deal with the reserves. There's a general reserve of rupees 9,000 by general reserve. Account. Rupees 9,000 to be divided in OPSR, which is 3:2:1. So we get 4,500 rupees for Amit, 3,000 rupees for Balan and 1,500 rupees for Chandar. There is no accumulated profits, no accumulated losses and no fictitious assets. We'll deal with goodwill. Existing goodwill is also not there. We'll deal with point 1. Goodwill will be valued at rupees 27,000. We'll do the working notes for this. The first working note, treatment of goodwill. As per the problem, the old profit sharing ratio between Amit, Balan and Chandar is 3:2:1 and Chandar retires. There is no mention about the gain or gaining ratio or even the NPSR. Hence, the gaining ratio is equal to the NPSR is equal to the OR between A and B, which is 3:2. So both the gaining ratio and the new profit sharing ratio between A and B is their old profit sharing ratio between them, which is 3:2. Firm's goodwill as per point 1, it's given as rupees 27,000. Therefore, Chandar's share of goodwill is equal to 27,000 rupees divided by 6, 1 by 6. So this is equal to rupees 4,500 rupees. So let's pass the journal entry. We'll debit the gaining partners. A capital account debit, Amit capital account debit, Balan capital account debit, to Chandar capital account. Against Chandar, we'll write Chandar shares of goodwill, which is 4,500 rupees, and divide this between A, Amit and Balan in their gaining ratio, which is 3:2. So in the case of Amit, it's 4,500 rupees into 3 divided by 5, which is 2,700 rupees. And in the case of Balan, it's 4,500 rupees multiplied by 2 divided by 5, which is 1,800 rupees. So this is a journal entry for goodwill. We'll post this in the partners' capital accounts. By Amit capital account under Chandar 2,700 rupees, and by Balan capital account again under Chandar 1,800 rupees, and on the debit side to Chandar's capital account. In the case of Amit, it's 2,700 rupees, and in the case of Balan, it's 1,800 rupees. The final item which we need to deal with is the fifth point. Chandar took over the investments for rupees 15,800 rupees. So it's Chandar's capital account to investments account. ₹15,800. So before we do the adjustment of capital, we will close Chandar's account, the retiring partner's account. The greater total 26,100, and the balance will be transferred to Chandar's loan account. Just 26,100 minus 15,800 comes up to rupees 10,300. Next, let's do the adjustment of capitals. We'll take the partner's capital account to the first half of the screen. And we'll do the working notes for adjustment of capital. So working note 2 is adjustment of capitals. Step 1 is to get the adjusted capitals of the continuing partners, which is Amit and Balan. In the case of Amit, the adjusted capital is credit side total 44,800 rupees minus the debit side total 2,700 rupees. This is equal to rupees 42,100. And in the case of Balan, the credit side total is 39,700 rupees minus debit side total 1,800 rupees. We get 37,900 rupees. Step 2 is to add up the adjusted capitals. So adjusted capitals of Amit plus balance is equal to 42,100 rupees plus 37,900 rupees, which is equal to rupees 80,000. And this needs to be divided in NPSR. We already learned that the NPSR between the continuing partners Amit and Balin was 3:2. So the new capitals in the case of Amit, it's 80,000 into 3 divided by 5, which is rupees 48,000. And in the case of Balin, the new capital is 80,000 rupees multiplied by 2 divided by 5, which is rupees 32,000. The final step 3 is to compare adjusted capital and the new capital. We need to make the adjustments through current accounts. In the case of Amit, the adjusted capital is 42,100 rupees, whereas the new capital is 48,000 rupees. So we need to debit Amit's current account. Has to be debited with the difference, which is rupees 5,900 rupees. And the case of Balin, the adjusted capital is 37,900 rupees, whereas the new capital is only 32,000 rupees. So we need to credit Balin's current account for rupees 5,900. So let's insert this in the partners' capital accounts. In the case of Amit, we will debit Amit's current account and credit Amit's capital account. So let's credit Amit's capital account 5,900 rupees. And in the case of Balin, we will debit Balin's capital account and credit Balin's current account. So we'll debit Balin's capital account 5,900 rupees. Let's write the balance carried down, which is the new capitals. It's 48,000 in the case of Amit and 32,000 in the case of Balin. If both sides tally, we know our arithmetic is correct. In the case of Amit, both the sides total to 50,700 rupees. In the case of Balin, again both sides total to 39,700 rupees. So this is a partner's capital accounts. So let's go ahead with the balance sheet. balance sheet as at 1st April 2019. Left side liabilities, right side assets. We'll begin with the liability side items. Sundry creditors, no change in value, 12,600 rupees. Provident fund, again no change in value, 3,000 rupees. The general reserve has been distributed. We'll write the loan amount of the retiring partner Chandar. Chandar loan account. As per the partner's capital account, the Chandar's loan account was 10,300 rupees. We have credited balance current account. We need to bring it to the liability side because all liabilities have credit balance, and the amount we've credited balance current account is rupees 5,900. We'll insert the partner's capital accounts balances. In the case of Amit, it was 80,000 in 3:2. The balance carried down. 48,000 and 32,000. Total 80,000 rupees. We'll continue with the asset side items. Bank, the opening balance was 4,100 rupees. As per point 4, an old photocopier previously written off was sold for rupees 600. So we received 600 rupees. So the final amount for bank is 4,700 rupees. Debtors, original amount 30,000. Less, no change in the provision, 1,000 rupees, 29,000 rupees. Stock, no change in value, 25,000 rupees. Investments has been taken over by Chandar. Patents, we reduce the value by 1,000 rupees, so now it's 4,000 rupees. Machinery, we reduce the value by 4,800 rupees, so now it's 43,200 rupees. We'll insert Amit's current account, which had a debit balance on the asset side of the balance sheet, 5,900 rupees. All the items are done. We'll check if the balance sheet is tallying. Liability side total is 1,11,800. Asset side also totals to 1,11,800. This is a balance sheet. I'll remove the split. We can view the full solution. We began with the revaluation account. Went on to the partners' capital accounts. Then the balance sheet. These are the two working notes. The first one, treatment of goodwill, and second one, adjustment of capitals.